less than P data end equals 492 data start equals 73 greater than. So here's what's unfolding in the markets right now, and it's kind of surprising. Despite the intense and escalating conflict between Israel and Iran, we're seeing a pretty remarkable reaction from both oil prices and the stock market. You'd think with missiles flying and strikes hitting nuclear facilities, the markets would be in full panic mode, but instead, oil prices have actually dropped, and stocks are surging. Less than APE data end equals 84, O data start equals 494 greater than. As of this Monday morning, oil prices fell by around 4%, reversing a good chunk of the sharp increase we saw late last week when the conflict initially flared up. Investors were worried back then about a wider regional war in the oil-rich Middle East, which could have sent oil prices soaring, but those fears have, at least for now, eased a bit. Less than P data end equals 1280 data start equals 842 greater than. Specifically, U.S. West Texas Intermediate Crude Futures, one of the key benchmarks, fell by 4%, and Brent crude, the global standard, dropped by the same percentage. Keep in mind, these prices had spiked up to 10% just days ago, right after Israel carried out a surprise strike on Iran's nuclear program, reportedly killing key scientists and military officials. That's a huge geopolitical flashpoint, yet here we are with oil cooling off. Less than P data end equals 1770 data start equals 1282 greater than. Meanwhile, the stock market is doing quite the opposite. The Dow Jones jumped 415 points, a 1% gain that basically wiped out the losses from Friday's market dip. The S&P 500 and the Nasdaq also rose 1% and 1.3% respectively. These gains suggest that investors are betting the conflict won't spiral into something broader that seriously disrupts the global economy. And that sentiment isn't just in the US. Markets in Europe and Asia also posted gains, with Japan's Nikkei rising over 1%. Less than P data end equals 2172, data start equals 1772, greater than. Now, from a consumer standpoint, the dip in oil prices might come as a bit of relief. Gasoline prices had been expected to rise due to the conflict, since crude oil is a core ingredient in fuel. But with this drop, the pressure might not be as intense in the near term. That said, analysts are still warning that we could see gas prices inch up later this week, especially if tensions escalate further. Less than OP data end equals 2487 data start equals 2174 greater than. The U.S., for now, hasn't gotten directly involved in Israel's operations, though it did help intercept incoming attacks from Iran. President Trump said on Sunday that it's possible the U.S. could get involved. So this situation is still fluid. Any new developments could swing oil and stock prices wildly again. Less than P data end equals 273, 3 data, is last node equals data, is only node, equals data, start, equals 2489, greater than. So while today's market movements suggest optimism, or at least a belief in containment, the underlying volatility remains. Investors are walking a tightrope here, hoping that diplomacy or limits on escalation keep the economic fallout in check. Stay subscribed for more videos.